Hey, good people. Once again, it's Max from River Rocks. And so there's a post I put up about assets and liabilities. And I wanted to clarify, excuse me, I wanted to clarify uh, assets and liabilities as it relates to life insurance. There are two main types of life insurance. Whole life, which most people know is for your whole life, and term life, which is for a specific time period. So what that means is term life does not accumulate cash value. Uh, and so, as an asset, the thing that you have to remember is that in term life, if it has living benefits, you can access the face value. So, if the policy has a $500,000 face value, then if you have a chronic, terminal, or critical illness, then you are able to access the face value. That's term life. Whole life in all of its variations, which means universal life, index universal life, basic whole life, those things accumulate cash value. Now, as an asset, yes, you are paying a premium. Now, there are other types of whole life policies or life insurance policies that have what's called financed premium. I'll get into that in another video. However, when you pay your premium into a policy that is accumulating cash value, it does become an asset in this way. So yes, liabilities take money out of your pocket and assets put money in your pocket. That's the simplest form of understanding how to generate wealth. It doesn't matter what you're doing. It could be a business, it could be stocks and bonds or what have you. Here's the beauty of life insurance. And here's what I want to say. Tax-free accumulation as part of the asset of a life insurance policy is what you want to focus on, not on the premium payment. Now, when you add annuities to that, then you're talking about real wealth building. And so the key component here is the long term or the long game when you're talking about building wealth using life insurance. I'm not saying life insurance is the only way. What I'm telling you is life insurance has the tax-free advantage of accumulation. Now, hopefully this is not too serious, okay? Uh, when you talk about when somebody says, how do you become wealthy? Uh, it's a long game. In the end, and we'll all end as human beings. In the end, the thing you have to remember is you have to create wealth over generations, not just your lifetime. And I think that's the main thing. So if let's go back, excuse me, let's go back to my example. Term policies, although they do not accumulate cash value like whole life, index universal life, and universal life policies, although they do not, they do leave a death benefit. Now, you may be saying, well, if that's the thing to generate wealth, then I don't want to do it. But you have to go back and think about it. Are you thinking about yourself? And it's good to think about yourself. Or are you thinking about the long term? And it really doesn't matter if you have kids or not, because life insurance policies can be set up to pay out to a organization of your choosing. Okay. And again, I go back to my example. You can add there's a piece of hair right here. Sorry, y'all. you can you can add a annuity to your policies. And so the thing is, when you have a life insurance policy that is accumulating value or not, it's still part of the wealth building strategy because it's long term. So when you have a long term strategy, that's the building wealth mechanism. It's not right now. Now, it's what's going to happen in the future. And how do you leave those instructions to the future? If you have children, dependents, and you specifically spell out what you want to happen with that money. You can use a trust to do that. You can create a will to do that. There's several ways to do it. But let me rewind. Okay. Life insurance policies can be used for purchasing houses. They can be used. There are things called, you can actually use the life insurance policy as a living settlement. If you have $1 million policy or $500,000 policy, usually they want a policy up in the hundreds of thousands. But let's say, for example, God forbid, something happened to you, and you now have a terminal illness, and you've been paying into this life insurance policy. You can access the policy face value or the cash value that's built up in the policy. There are a lot of different ways to do it. And if you have kids, start a policy when they're 0 years old. As they grow and you continue to pay the premium, you can access the accumulated value. Now, there are some people, individuals that would debate me on I don't want to say validity, the um, uh, value of a cash value policy. I hate that term, but people use it all the time, so it is what it is. And say that the you're borrowing from yourself and all that kind of stuff. Listen, you borrow from the bank, you get credit cards. We borrow all the time. So what's the difference? And then you have a death benefit. People fail to realize the death benefit is paramount. So anyway, there are a lot of other things I could cover, not in this video. It'd be hours. So if you want to know more, just reach out to me or not. It doesn't matter. You do your own research. And until next time, have a great day, guys. See you next time.